Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. In a short while from now, we will connect with our experts. But let's have a look at the markets. So Cheryl, nothing much on the index level, though we are in the green territory. That's a good part. But apart from that, looks like that the markets are taking some breather after the stellar run-up.
Absolutely. After the stellar run-up, definitely the markets are taking a breather, Shrishti, and I think they are also geared or poised for the earnings season, which in the next 10 days or 12 days or so, it may kickstart. Right now, we are also enjoying the fact that it is pretty light and is pretty dull when you talk about the news flow. But yes, come 10-15 days and you'll have a barrage of news to actually look at. Also, you will have the RBI MPC meet outcome also that will be due in the month of October. But let's take a look at the markets. Yes, after the stellar run-up that we've seen, we are actually seeing range-bound moves, but nevertheless, we've been hitting fresh record high levels on the benchmark indices day after day. Today, once again, you had the Nifty as well as Sensex hitting a fresh record high level. Nifty Bank moving exactly in tandem with the benchmark indices, or rather a mild bit of underperformance when you compare it with the benchmark indices with the way of the absolute gains that are going about. Talking about the advanced decline ratio, right now a tad bit tilted in the favor of the declines. Let's take a look at the list of the gainers and the losers then. You have Maruti Suzuki, that's the top gainer on the Nifty, 2.8% uptake. You have Tata Motors up 1.9%, Bajaj Finserv, Tata Consumer as well as HDFC Life among the list of gainers. While on the flip side, you have Hero MotoCorp, ONGC, M&M as well as BPCL that are actually declining in today's trading session. Let's take a look at the sectoral indices then. And talking about the sectoral indices, you have the PSU Bank Index that's holding on to gains. IT and metals are holding on to gain, while on the other end of the market, you have the oil and gas and the broader markets taking a bit easy. So that's the way how the markets are looking like at this point in time. But let's take a quick market check with Kunal, who's waiting by very patiently. Very good morning to you, Kunal. Kunal, how is the market looking? Do you think that this sort of a performance of a range-bound trading session will continue going ahead for the markets? Any chances of a surprise on either side?
Surprise should be on the positive side, because look at it this way, that even with the last 2-3 days of some intraday choppiness, the indices are still making a pattern of higher lows. So they're trying to respect the previous lows. 10th consecutive day is what we saw yesterday. If we count today's move for the Bank Nifty so far, it's the 11th consecutive day where the Bank Nifty has been making pattern of higher lows, and that's a very clear signal that the Bank Nifty is going into a fierce uptrend. And we've seen historically that whenever the indices get into such kind of a 10-day, 11-day consecutive price uptrend, respecting the previous lows, the index has marched up higher, on a multi-week basis. So I think it's a phase of pause, some sector churn, some within sector churn, which is happening into stocks. But I think one largely looks at the index trend, it's still on the positive side. Expiry week also is one of the critical reasons why the index suddenly gets into a confined trading range, because the adjustments of positions and rolling over of positions. So that's a very natural kind of a course which traders have to take. But once that is out, the trend generally comes back into a continuous or a consistent mode on the upside. So I would probably believe that we are looking at a trend build up for the indices. Previous two lows or for the index should be taken as a good trading stop loss for someone who's looking at a very ultra short term kind of a trading position.
All right, so that's the take coming in on market. That's Kunal's view coming in on the charts of how the markets are looking going ahead. Once again, good morning to you, Kunal. Good morning to you, Sharmila. Also, Sharmila Joshi is waiting by patiently to take all of your stock-related queries, especially on the fundamentals side. Just a quick reminder to our viewers that you can connect to us on the number flashing on your screen, and each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you've already invested in the stock, mention the buy price, the quantity and the time horizon. Time horizon being very crucial, because in that way we will be able to guide you better and direct your query to our experts better. On the technical front, it is Kunal Bothra. On the fundamentals is Sharmila Joshi. And good morning once again, both of you. And Sharmila, let me come first to you actually, because this one is coming in from Bharti Dave. Who's a senior citizen, long-term investor, has invested in Raymond's 50 shares at a price of 1,210 rupees per share. What should he do with this particular counter now that you have another Raymond entity also listed?
I'm sorry, I didn't get the stock name.
Raymond.
Raymond.
Yes.
So honestly, I'm not a fan of Raymond because I think that where you have some issues with the management, and we have seen those in the past. Though I believe now things are sorted. So I think when there are so many better stocks in our universe, I really am not a fan of Raymond. But in terms of numbers and the fact that it's split, I think since the investor already has it, he can stay invested. But I would definitely not recommend a fresh buy.
All right, so that's the take coming in on Raymond, but let me take the next query then, and this one is coming in from Venkatesh. His query is on Cyient DLM. Kunal, have you checked the charts of this one? A recently listed counter, but actually he wants a view for 3 years. So let me take it to Sharmila instead and ask her about Cyient DLM. He's purchased about 125 shares at a price of 695. What's your take, Sharmila, for the longer term if you've tracked this one?
I think that he can definitely stay invested in this. In terms of numbers as well as valuation, the stock looks decent. You could continue to see a bit of pressure on the stock, but if you're long term and if you're talking of like a 3-year view, then I think you can stay invested.
All right, this one is coming in from Smita Vikram, writing to us from Bangalore. Kunal, MCX, what's your view on this one? Is it a good time to enter the stock right now? Any scope of a further correction? Is this the attractive price, and is it a good stock to buy?
See, first, it's a good stock to buy. Second, may not be the best price where you can look to buy, because I think in the last 2 days, what the stock has started to show is that maybe 6,000 levels could be a near-term resistance. And after such a steep run for MCX, looking at the historical high beta, high volatile zone, I would probably expect that maybe the stock corrects by a margin of say another 5%, 7%, then I think it could start to look a lot more attractive. But then remember that it's a very high beta stock, so I've seen historically that the stock gets into a swing of even 10%, 20% to 30% correction before it gets back into a V-shaped recovery. So you'll have to be a lot more circumspect when you're trying to buy the stock on dips. As of now, it looks like that maybe 5,500 level, 5,400 levels could be a good starting point in case if the stock happens to reach to those points, and in case if the stock provides any further dips, look to accumulate further.
All right, let me take this one to you then. Sharmila, this one is from Anu. Anu has Canara Bank at a price of 117 rupees per share, and also has AB Capital at a price of 245 rupees per share. For the medium term, how are these counters looking, and do you think amongst their segment, they are the best play to bet on?
I don't know about best play, honestly, but in terms of if I just look at Canara Bank for itself, in terms of valuations, it looks all right. I think what we must understand here is that probably the reason why a lot of PSU banks are facing pressure is the fact that you have seen a little bit of a slowdown in the deposits they've been able to attract, etc. So probably the stock prices won't return to their highs till we get to that rate cut and into positive commentary from the numbers front. But as you all were just discussing a little while earlier, we are not very far away from a rate cut, and in other terms, Canara Bank looks fine. So I think stay invested. When you come to AB Capital, I'm a little bit more positive there, given the fact that we have seen that this stock, once the new management came in and they were very aggressive, and they have sort of charted a new path for themselves, and they seem to be progressing on that new path pretty well, and they are meeting the targets that they set out for themselves, etc. Again, broadly, whether it is AB Capital or Canara Bank, the sector view is very positive. So I think if you're a long-term investor, you can definitely stay invested in both.
All right. This next one, Kunal, is coming for you. It's from Indu. She wants to know about Biocon. She's saying that she has Biocon holding with a 10% gain, but the stock is lacking momentum. And also on a weekly basis, she's actually losing some of the money as well on her entry gain. So she wants to know what should she do. Any other alternative that you have for her apart from Biocon? Should she exit it in the first place?
See, I think I would not recommend an exit on Biocon. My sense is that if you're a long-term investor, since you're sitting on 20% profits, stocks generally take some time to try and kickstart a strong round of momentum before they end their multi-year phase of correction. So I think Biocon had already gone through that phase of correction, and for the last I think, if I'm not wrong, 3 or 4 years, 2021 highs of 450, 470 approximately, towards the point when the stock was sub 200, the stock has gone through a sharp corrective phase. So it's getting to a recovery. The first part of the recovery, as I said, could be slow, but then gradually the stock picks up pace. my sense is that you should hold on to the stock since your buy price is closer to 300 or levels.
All right, moving on to the next query then, and this query is coming in from a viewer named Simran Soni, and this query is coming in. Okay, let me take the next one, Kunal. This one is coming in from Nika. Query, the viewer name is Tina, and she's holding the stock from a price of 225 rupees. What's your take on Nika, Kunal?
So I think it's a stock which is getting into a recovery. So I think on that day when the stock, or rather on the week when the stock had hit that 225 mark, the volumes were at a multi-month high for the stock, multi-week, multi-month high for itself. So which means that what we are looking out for is a potential start of an uptrend for Nykaa. Yes, the stock has come back from that 220-25 mark to that 200 levels, but then the pace of correction the stock has seen, the volumes have drifted down significantly. So which means you are seeing the stock going to just a mean reversion phase rather than a major reversal. I would believe that potentially in the next 2-3 months or so, the stock should ideally try to make a comeback to that 225 plus mark, and then depending on the news flow surrounding the stock price as well as the market environment, I think we could probably take the next trend call for Nykaa. But as of now, I think at sub 200 levels, I would suggest a hold.
All right, so let me take this query from Simran Soni then. This one is for you, Sharmila. Wants to know about Reddington. She wants to know whether she should accumulate some more at these prices for the long term. Her long term time horizon is about 3 years. She's saying that she's already invested about 50 shares at a price of 205 rupees per share. What's your take coming in on Reddington? It's a good play in the segment that it is in right currently, and also it has a part or it's a distributor of iPhones, isn't it?
Yes, and I think that's what sort of added a little positivity to the stock. But overall, if you ask me honestly, the stock has disappointed because I've been tracking this for a fairly long period of time, and it's really been sort of in that range. So I think hold what you have, but don't really accumulate more. I think these other plays, which are sort of manufacturers with lower capex or lower investment, those seem to be doing much better than like an Amber Enterprise or a Dixon. Those sort of stocks seem to be doing better than a stock like Reddington. So yes, because they have these important things that they trade in, commodities that they trade in, like iPhone, etc. Stay invested in what you have. But as I said, my personal experience with the stock has been quite disappointing.
All right, that's the day coming in on Dixon. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere.
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. We have our experts Kunal Bothra as well as Sharmila Joshi waiting by and who are actually responding to all of your stock-related queries. So let me continue taking them then. This one is coming in from Jude. Jude is writing to us from Mumbai. And he wants to know whether he can look to buy KPR Mills or even for the matter of fact Senco Gold at current levels. Kunal, KPR Mill yesterday saw a block deal take place, but what's your take on Senco Gold in particular?
So I would not suggest a fresh buy in both of these stocks. Yes, they've done exceptionally well, but the risk reward is a bit off for both of these names. Senco Gold at 1450 levels, KPR Mills at closer to 975, 980 plus mark. So I think both of these stocks, they are very attractive. I would have suggested a hold had you bought it at lower levels, but I think at current levels the risk reward could be a bit skewed. So either wait out for a correction into the stock, maybe a 10% correction could be a good starting point where you can look to consider to start buying.
All right, the next query that I have, Sharmila, is coming in from Sangeeta from Pune, and she wants a suggestion and she wants to know about your top bets from the FMCG and the IT space right now. Any stock that you are tracking, Sharmila?
So very honestly, just a little while earlier when we were talking of, I forget, I think there was a query about Nykaa. So I was just thinking that there was a report last week that said, how your consumption is sort of changing and urban consumption is driving the story sort of. So, given that Trent is at a new high and we have stocks like a Zomato or a Nykaa, which could, sort of lead this new consumption pattern that we are seeing. So, rather than picking a standard FMCG, the old model FMCG, I think it might make more sense, especially if you're a young person, to sort of put your money and a little bit of risk you might have to carry, but where the numbers are good. So maybe Trent obviously is at a new high. So maybe you could wait to buy that, but something like a Trent or maybe a Titan even, because I'm very positive on jewelry as a play, or maybe a Tata Consumer, which is slightly different but related, or maybe even a Zomato. So, that would be one. For IT, I think if you have large cap IT in your portfolio, then look at mid cap IT, because if the niche that it caters to does well, then you see good growth in mid cap IT. I like a Zensar, for instance, at this level. Even some of these other. The only reason why I'm not talking of Coforge and Persistent is that their F&O sort of skews the trade. But those are also again good stocks. So you could look for the Tata one. You could look at that Tata LXC as well as the other stock. I think those are the kind of plays that you should include in your portfolio with a long term view.
Right, so that's the bets that you can take in the FMCG or the IT space. Then moving on, this one is coming from Gautam. He's writing to us from Mumbai. Kunal has 1,500 shares of New India Assurance at a price of around 285 rupees per share. Should he hold or look to exit this one?
See, I would suggest to hold on to the stock. Yes, the stock has gone through a correction, but like many of the insurance stocks, they've also gone through a corrective phase. Now, interestingly, for New India Assurance, 220 seems to be a major support, which the stock has been holding on to throughout this year. So I think there have been multiple attempts to this 220 mark, but the stock apparently has been managing to hold on to this level. So I would suggest to hold on to the stock on the way up. Whenever the stock gets back into a recovery, I would probably believe that the stock should be able to surpass the levels of 285 yet again.
All right, moving on to the next query, and this one that we have is coming in from Deepak from Bangalore. And Kunal, he wants to know any good level to enter PCBL, but he's looking to stay invested for the long term. Do you like the stock and any levels to highlight?
See, I think yes, the stock has done very well for itself, and I think in the last couple of months or 2-3 months to be precise, the stock has almost doubled from 250 levels to 500 plus. Now, the best price to try and buy the stock, or a better price rather to buy a stock, would be closer to that 475, which was the previous swing support, swing low for PCBL. But the stock is very high beta. So in case the stock gets into a corrective phase, I would believe that the correction could extend to maybe 15-20% also. So wait out for that odd phase when the stock gets into a sharp correction, say closer to 475. Sub 475 could be a good starting point, and then look to buy this stock on dips. But the long-term charts after this kind of a 3-4 months of a strong up move looks to have come back into a much more positive territory for PCBL.
All right, this one is coming in from Pallav Gupta. This one is for you, Sharmila. Wants to know about Asian Paints, whether to hold or to exit. 28 shares at a price of 2,300 rupees per share. Our viewer has purchased Asian Paints in the year 2021. The viewer is actually apprehensive given that there is a new competition in the paint segment, worried that it may end up denting the premium valuation as well as the margins for the company that it had in the past. Are you also of the similar view? And do you think on back of that it makes sense to exit Asian Paints or stay put with this because this is a formidable player?
Yes. So just before I answer that, I was struggling to remember the name. It was Tata Tech. I don't know why Tata Communication was coming to my mind, but earlier when I was referring to the other Tata IT company, I meant Tata Tech. Coming to Asian Paints, I think is absolutely bang on point. This increased competition has eroded the premium valuation that Asian Paints used to get. But the only thing that you must remember is that this is now the story that there is competition coming and this slow erosion of their premium valuation has now taken place over the last couple of years. So I think that's a issue that we have now dealt with. And if you look at the numbers as well as the valuations of Asian Paints, they continue to be strong. So now the only thing that you have to bear in mind is that because of this increased competition, you may not see Asian Paints get premium valuation, but it will get the valuation that it deserves as a company and as a part of the sector that it's in, and it is still a leader there. So I would really, I'm quite positive, and I would really stay invested given the fact that his buying price is also lower. And I would still think that in the paint companies, this company sort of holds its own in terms of numbers as well as margins. So I would recommend a hold.
That's a hold coming in on Asian Paints. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. As we come right back, we will be taking more of your stock-related queries, so stay tuned. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries. Then, and Sharmila, I'm coming to you for the next counter. This query is coming from MVS Rao, and he has invested in Bajaj Finance 60 shares. He bought at a price of 7,210 rupees. Sharmila, your take on Bajaj Finance, maybe in the short to medium and then long term, if you can help him with your take on this large cap.
So I think a positive, of course, and just a little while earlier we were discussing AB Capital, and at that time I said I like the sector, and we are now just around the corner. We may have a rate cut in October, and I think that will bode well for NBFCs. And if you look at Bajaj Finance and the business that they're in, as well as their valuations and the numbers that they have delivered, for the long term, it's a definite hold. So it's a stock I like, so a hold.
That's the take coming in on Bajaj Finance. Coming to you, Kunal, this one is on Vedanta. Is it a good buy at current levels? Venu is asking.
Yeah, it looks like, but just remember that this is a very high beta sector, high beta stock. So there could be possible that the stock may get into those odd, high volatile corrections every now and then. But yes, in terms of a chart, it looks like the stock is breaking out of a multi-week, multi-month consolidation, something which started off, I think, in the month of May, June for Vedanta around the 480 plus mark. So as a chart, it looks very attractive, but you just have to adjust your position size with respect to the beta nature of the stock.
All right, that's the take coming in on Vedanta. What we are seeing is that the stock is recovering from the day's lowest point, but moving on to the next counter. And Kunal, Padma has been holding 3 to 4 stocks. Stocks like M&M, Maruti, as well as ICICI Bank are some of the stocks that she's holding. But and she's also having 25 to 30% of profits. From these three, would you advise to book out profit in any of these names?
Maruti, M&M, and ICICI Bank.
Yes.
I would suggest to hold all three of the names. So you have quality stocks, and I think all three of them have come back into a sort of a recovery or a leadership mode. ICICI Bank, I think, hitting that 1,300 plus mark. M&M crossing back again above the 3,000 levels, and Maruti, I think, is about 13,000 plus mark. So all three of them, they are looking attractive, and they are coming back into a breakout mode. So, and that too at a point when the market requires these large cap stocks to perform and as well as build their gains for themselves. So I think it's a good sign that these stocks are looking attractive. I think you should hold on.
All right, this next query that I have is coming in from our viewer. I've actually skipped that query. 1 second, let me just get back to that one. Okay, this one is coming in from Akhil, writing to us from Delhi. He wants to know about one between Vedanta Sale, Tata Steel, Hindalco or JSW Steel, basically from that entire steel pack. Which one is one stock that you think is good to bet for the longer term, Sharmila, as well as Tata Chemicals? He wants to know about that one as well. How does that one look to you?
I was hoping that question would be for Kunal. So, very honestly, if you're asking me from the longer term, metals, to my mind, the valuations are high, but, the changing scenario in China has put this sector back in spotlight. So what I would really advise is that I like Hindalco because that's an aluminium play. So you need one aluminium play, and that could be Hindalco. And I think as a steel play, maybe you could include JSW Steel, and Jindal Steel is another stock that I like. So these could be two other stocks that you could include. But bear in mind that, in terms of valuations, I think they're all expensive. It is just that overall global sentiment is positive, and this sector does move in tandem with the mood internationally. So yeah, these could be the three stocks you could look at.
Those are the top bets from the metal space from Sharmila. But Sharmila, one more query from the Bajaj Group is on Bajaj Housing Finance, wherein Ramki from Delhi has bought these shares at a price of 214 rupees. How do you see the stock right now? And given the kind of run up that we have seen, would you still suggest a hold in this counter?
This is obviously, like a very fresh listing, and we saw the kind of excitement that it generated at the time of the IPO. So this is again, to my mind, just when you're at the cusp of a rate cut, this is a very good sector to be invested in, because all housing finance companies will gain if you begin to see a cycle where interest rates are cut, because then that pass-through will come. And Bajaj Housing Finance is nicely poised in terms of numbers, new listing, etc. So I think stay put. There could be because it's a new listing, you could see a little bit more of I typically give 3 months to a new listing before you buy fresh. So if you're willing to wait that long, I think that could be an ideal period to wait before you buy into Bajaj House.
All right, this next one is coming in from B. Behra from Katak, wants to know about Zomato. The query, let me read it the way he's written, saying the day before yesterday, the viewer sold 2,000 Zomato shares at a price of 297.4 rupees per share, which he had already bought at the levels of 185 rupees per share, Kunal. Yesterday, again, the viewer bought about 500 shares of Zomato at 184. So now he wants to know, at what price do you think he should re-enter or accumulate some more of Zomato? Well, his strategy, at least of buying at 185, paid off pretty well. But what's your take now? I think he bought it at 284. He cannot buy it at 184 yesterday.
Yeah. So that's understood. But I think on the short-term charts, what I would probably sense is that the stock is trying to define a range, a trading range. So after a stupendous kind of an uptrend for itself over the last 1.5 odd year from 50 rupees odd towards almost 290 to 95 plus mark. I think right now the stock seems to be getting into a consolidation. My sense is that the stock should break past about the 300 levels pretty soon, depending on the way the markets pan out over the next few weeks. So I would probably believe that at this stage, look out to trade the stock maybe closer to 305, 310 is where you can look to book profits, and then keep on buying the stock whenever it tries to come back again to this range on the downside, which I think is closer to 275 as a support for Zomato.
All right, that's the take coming in on Zomato. But let me take the next query, and that is coming from Anita from Mumbai. And Sharmila, she's holding 10 shares of Shriram Finance. She didn't share the buy price of this counter, but wants to know, is this a good long-term bet and any targets that she should look out for?
So yes, from a long-term perspective, the stock is good. Currently, the valuations are a little on the tad on the higher side. In terms of targets, maybe you could keep 3,800 in mind, but that's just sort of a notional target that I'm giving you. Just keep following the story, and while they are on track, I think this is a good long-term story to be invested in.
All right, so that's the take coming in on Shriram Finance. Let me take this query coming in from our viewer Balan. And Balan has BSE, HUL, Krishna Diagnostics in his portfolio, making a good profits in all of these counters. Kunal, makes sense to exit any of these counters or stay with them?
See, I think BSE could be the only one where you may look to trim profits. I would not say to exit, because I think that's a chart which over the last 1.5 odd month has moved more than 35 to 40%. I think from 3,000 to 4,200 levels. So maybe closer to 4,000 mark. In case if the stock provides a rally, you can consider booking out partial profits and then keep on trading into the stock, because after such kind of a steep uptrend, the long-term chart looks a lot more better. But the short-term opportunities, generally, factored into the stock price. So we generally advise that at higher levels on a short-term time frame, you tend to book out profits and then keep on buying the stock when it provides that short-term correction, so that your long-term charts continue to look a lot more better for stocks like BSE.
All right, that's the take coming in on BSE. But the next query that I have is coming in on BEL. And Kunal, let me have your take on this one. Kurnool AP is having 500 shares. His buy price is 309 rupees. Currently at a loss, but wants a short and as well as a long-term view on this particular stock.
See, I think at current levels, you can look to start nibbling into the stock. So what's happening is that the stock is just about taking a mild resistance at its 50-day moving average. Now, my sense is that whenever the stock scales past about this 50 DMA, the pace of rally or the recovery rather for the stock would start to get a lot more better. Look at it this way, that the stock in the last 3-4 months has corrected almost 20, 25, 30%. So from 340, 50, 45 mark towards the point where the stock was at 270 levels. That's a good 70-point correction for a stock like BEL. So I think in that sense also it looks like that the stock has come back towards an attractive territory. So 275 could be a good point where you may look to buy average, and on the upside, as I said, 300 could be a breakout point for the stock where it starts to get back into momentum.
All right, IRCTC then, our viewer has purchased at levels of around 1,025 rupees per share, about 100 shares. Kavita has actually purchased of IRCTC, wants to know whether to stay put with this counter for the longer term, or look to exit? What's your take, actually, Sharmila, coming in IRCTC?
May not see the kind of excitement that we saw in railway stocks. Because we've seen that entire basket as well, a lot of PSU, the defense play, correct. But just by itself, the business that IRCTC is in, the numbers that they have delivered and the valuations that they are at, I'm quite comfortable. My target may not be, my target could be around in that 1150 range. But at this price, for me, the stock is okay.
All right, Kunal, the next query is coming from Anjali from Chandigarh, holding 140 shares of MTAR Tech, and her buy price is 2,263 rupees. Your advice on this?
So the stock is taking its own time to try and consolidate. It's a stock which I think had done pretty well from 1,000 to 27 or 2,800, which was the high the stock had made. But now, in the on the back of the correction on the defense stocks, even this stock has corrected from 2,800 to almost 1750 where it's trading right now. So my sense is that it's going through a patch of consolidation. Difficult to expect that when would the stock complete its phase of consolidation. But whenever that happens, once volume starts to move up higher, the trading activity improves for MTAR Tech, that's where we tend to anticipate that the stock forms a bottom and then starts to move up higher. So bullish on the longer term prospects for the stock, but short term wise, I would believe that the stock may consolidate further.
All right, so that's the view coming in on MTAR Tech. On that note, we will slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of the stock related queries, and there are a couple of queries actually from coming in from our viewers. Just want to know about the general market mood, where the markets are headed, and which are the stocks in the particular segments that one can look at. So Kunal, let me take first one with you. This one is coming in from our viewer that is okay, I don't have the name, but wants to know whether as a strategy, is it good to sell partly and sit with cash to buy on dips in the mid cap and small cap shares for the near term? Do you think it's an advisable strategy right now, if you are making profit, to actually partially book that and sit on cash?
See, it's going to be stock specific, because if you have stocks which have, for example, which have run up, say 2x, 3x, 5x in the last 2-3 years, then it makes sense to shift as a strategy more towards mid caps to small caps. The other part is that, assuming you started off with your portfolio, say with 20-25% weightage on mid caps and 65-70% weightage, say, on large cap names, and because of the price performance, that's gotten shifted to maybe 50%, 55%, 60% for mid caps and underweight on large caps, then I think making that shift is a very good approach, because what we are seeing right now in the last 1 month, specifically start of September, is that many of the large cap stocks have started to look attractive. They've started to get into a breakout mode. There is a follow through up move. So, and in that leg, the mid caps are underperforming. So it's not a blanket exit which you can follow as a strategy, but some bit of shift in terms of your portfolio stance, in case if it's gotten a lot more skewed, I think could be a call which you can take.
All right, moving on, and Kunal, once again coming to you. This query is from Vivek, and he's written that media and entertainment sector, which 2 to 3 good stocks to buy for the next 1 to 2 years?
See, I think the only stock which comes into the fray over here on the charts is Sun TV, and that's apparently a stock which over the last 1-2 months I think has corrected from 920 to 770, 775 mark the last I had seen. So I think in that sense, maybe Sun TV at current levels, just around that 800 mark, could be an attractive proposition to look out for. But just remember that it's a high beta stock and it's already gone through a sharp correction. So the overhang of the correction may sustain for some more time. So you can buy it in 2 phases. You can buy one part at current levels, and in case if the stock remains to be a lot more volatile going forward and provides maybe a 10% correction opportunity, look to add further.
All right. This next query that I have is coming in from Pratiksha, who wants to know about some of the counters. That is, one is Honasa Consumer. She purchased at levels of about 515 rupees per share, as well as CCL products at a price of 751. Wants to know whether it makes sense to stay put with them in the very near term. What's your take on these counters, actually, Sharmila?
I don't have a near-term view, but I like both the stocks. I think CCL products I've been tracking for a really long time, since it was, I think, maybe 30-40 rupees. But I think that stock is still strong. And Honasa, again, a little while earlier we were talking of Nykaa. So in the same category, you have a company called Mama Earth, which is Honasa. So I think, again, these kind of products are seeing good sales. So you could continue to be invested in both, but this is not a short-term view.
Sharmila is positive on both the stocks. Kunal, what's your take? Honasa 515 is the buy price, CCL products 551. What range will it reach in the next 3 months?
So CCL I would be more bullish on. The stock made a high of 850 and right now it's at 700. So I think closer to the next 2-3 months, I would probably expect the stock to come back to the midpoint of this range, 775 approximately. And for Honasa, I think the stock is consolidating. So I think it's still yet to define or retest the range of 450 mark. But once that retest is done, then we can expect a bounce back to that 500, 520 levels.
All right, that's the take coming in on both of these names. But with this, viewers, we are completely out of time in this edition of Buy Now Sell Now. Thank you so much, Sharmila and Kunal, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's time to wrap this edition as well. It's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.